Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is a mini S&P 500 futures contract. Front month in nature, looking at the last print of 1195. Even, we'll call it, on this, the 19th day of November, 2010, Friday. Kind of an interesting session earlier. We had the bears in full control, dominating the market as the market gapped to the downside on today's early session. Continued to follow through from a move, we'll say, from 94 down to essentially 88 or so. Had a little bit of a double, triple bottom. Bounced right back into our key measure of trend, as you can see right here. Beautiful selling opportunity given the bears were in total and complete control. But the market really just wasn't ready to go lower. It wanted to fill the gap, and essentially we've almost filled the gap. We have the gap around here at around 98 was the close or so on Thursday, and we've yet to fill the gap essentially, but as you can see, the market is definitely trying to fill the gap. Again, it was a beautiful shorting opportunity, but it quickly stopped out, and we've just essentially treaded water for the whole of the session for the rest of the day. And what's interesting is you can see this, of course, 2 p.m. Eastern Standard Time. You can see that the bulls have essentially erased all the. If you look at our proprietary indicators here, our intraday dynamics, you can see that we have bearish, 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 and as you can see right now, we're actually moving in the green column, which is a bullish column. Bull, 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 bull. The market is above the trend, so arguably, save the resistance from the gap fill, the market, which essentially would be around 1198. So we're actually going to put that out there as the informational free trade of the day on the ES, the day trade of the day, is go ahead and sell the market anywhere from the time you get this video from 96 to 98, we'll call it. Go ahead and stop it around 1203 or so, 5 points. If you get it at 98, you can go ahead and get it back out around 95. 3 quick points. Go ahead and hold the rest of the position down to, we'll say, 91. Which is right around here on the market. This is the ES, and of course, there's your free informational purposes ES trade of the day. Not the best trade. If it was a 5-star trade on a 5-star rating scale, we would give this trade probably about a 3. Having said that, the bulls are in control of the market, as you see. As you can plainly see, so a break above, we'll call it 1200. Essentially, if you've not taken the short exposure and you want to favor the long side, go ahead and buy at 1201, target 1206, maybe 1206.50. Go ahead and stop at 1197.50 or so, and that'll be a good long trade for all those bulls, because essentially the bulls are in control, as you can see. So there's a couple of trades, one on the short, one on the long. You can essentially take your pick. As you can see, the market, price being the final arbiter, is essentially saying, hey, we're on the neutral side. So if you want to trade, those are a couple of trade setups, but overall the market, as mentioned, remains on the neutral side on the intraday. But as you can see, yesterday the market was full all out bullish, huge gap higher, really wasn't going to retrace much of that gap, and actually finished near the highs of the day. Wasn't the case on Tuesday, as the bears remained in total control. Again, a gap lower and a continuation move as you see all this accelerating bearishness on the market. Based on our intraday dynamics. So full all-out bearishness. This was pretty interesting indication. On Wednesday, we had the full all-out bullishness amidst a very quiet market, so really suggested we were going to at least retrace to a key fib zone around 1195, this move. And of course, the market actually went up to the very round and psychologically at least significant 1200 level in terms of price on the ES, the front month. And so that's where we are now. Essentially, that's where the logic becomes behind the short setup. We'll call it 1196 to 1198 was the resistance left over yesterday, but of course the bulls remain in control, so again you have kind of a neutral bias on the market. If we look at a daily chart, a chart of the daily market, go ahead and minimize that. Here we go. So here we have the S&P 500 cash market. As you can see, so we've mentioned last week that we certainly weren't going to be chasing the market to a level of 1220. We didn't get into this move, unfortunately, regrettably, given the obvious choppiness. But we did mention the market was likely to move higher based on this setup right here, which you can, as you remember from your videos, we did mention the move. We just didn't participate in it officially, but certainly around 1220, we're looking for a bearish indication. We mentioned a move back to 1180 to 1200. We wait on a retest. Excuse me. To the upside, so we're actually going to officially move to bearish at the close today on the market. So those of you getting the videos can go ahead and position yourselves, because we have essentially gotten the move down and retraced to essentially what is the 50 fib. We could get a move to, we'll call it 1206.34. I'm going to go ahead and jump in on the short side. Could essentially retest the 1220 level. Our stop will of course be around 1225 on this trade. Of course, this is a longer term positional trade. As you can see, the bears have taken control in terms of momentum, short-term bearishness amidst a gray-black level of neutrality in the intermediate-term bullish state phase of the market. In terms of directional movement, the bears have overcome arguably a short-term neutrality bias is the case there. In terms of price technicals, horizontal resistance, we have 1200 to 1220, obviously and clearly. Should be an impressive head and shoulders formation. A little bit of shoulder right there, nice head. A little bit of shoulder right here if we can hold 1200 for a bearish bias, bearish case right there. So there's the market. Overall, the portfolios, we're going to go ahead and look right over here. There's the home page. As you can see, as mentioned last week, we've added a lot of things to the website. A lot of our newer trading models incorporated into a lot of these portfolios, these ultimate portfolios, essentially over the last year with the beginnings of the MSAU. An MSA UDT, that was essentially, and of course the Q Trader was an attempt to go through and pick out the best performing systems that were really outperforming in this market, and of course that is our ultimate line of portfolios. We now have a 5K version, a 10K version. You can go ahead and subscribe to the Master Auto Trade version of the Master. We've mentioned that before. The Ultimate MSA portfolios, of course, and then of course you have the Ultimate S Swing portfolio, which will be a $25,000 portfolio, $50,000 portfolio would be the moderate, 25K aggressive, 100K would be conservative for those portfolios, and of course the $10,000 MSA UDT, the venerable, becoming venerable MSA UDT, and of course the #1 rated Q Trader. There you can see right there on the Q Trader. We're also going to be opening up the disc pad. We've had a moderate or an impressive market, I should say, drawdown lately in our portfolios. In fact, even the relative outperforming MSA UDT has had a pretty nasty drawdown. We'll look at, I believe it's right here, 53% drawdown so far in the MSA UDT over the last 24 days. Now this, folks, is the prime opportunity to get involved in these portfolios. Most people out there, 99% of the people who trade on emotion and their own personal trading has led them to turn it over to professional trading and professional automation. You really need to divorce your emotion and don't chase, the 150% returns. If we have 150% period over a month or two, you really want to wait until that portfolio retraces a little bit, then jump in. In fact, we're going to be introducing, I actually have introduced, a pay only if profitable version of our portfolios, and that is essentially we're offering that to encourage one to participate in the portfolios after a drawdown and not essentially chase after we've made 100 or 200%, had a run up, have people start at that high and then have to ride down the drawdown that we've seen right here, 53%, have to ride out that drawdown. No one likes that. You're not making any money. We don't have a long-term client. A lot of people will actually stop at the bottom right before we have the next big run up. So essentially, time these portfolios, get in after a drawdown. To encourage that, we're going to have, you can write into admin at MiniAnalyst.com, write into admin to find out more about that. It is a pay only if profitable basis. So if you don't make money, you're not going to pay any sub fees, and essentially that is to encourage one to take advantage of these portfolios after a drawdown. And of course, as you can see, we've had a nice little pop back in the market over the last few days. In fact, the MSA UDT, again, relatively outperforming with a gain of 20% over just the last 3 days. As you can see, the 10% gain for the dual day trader DS, MABDTT version 4.0 HR up 14%. So we're having a nice little pop. So again, a great opportunity to get involved in these portfolios. If you have any questions, go to the website, chat with the support team live, or shoot us an email to admin at MiniAnalyst.com. And again, we hope you enjoyed your week, and we'll see you next time.